You're watching the debate. Secretary-General of the CIPI Foundation, Mr. Paolo Raffone, is with us now live from Brussels, and CEO of banktothefuture.com, Simon Dixon, is with us live from London, with us to talk on this edition of the debate. I'll start my first question with our guest in London, Mr. Dixon. We'll start with the results of the new survey that show more than half of Britons, Mr. Dixon, are cutting back on heating, shopping and takeaways. What's your idea about how the economic recession is affecting the public's quality of life?
Well, I think this survey is giving a realistic reflection of where the real economy is. Because very often we're seeing reports in the media about how the economy is recovering. But what we're actually seeing is reflected in this report. When you have austerity measures without stimulations in increases in wages and getting money to business and people that can employ people, then you definitely have the wrong policy, and that's what we've seen. And remember that all we've seen as well is quantitative easing, which is stimulating the speculative side of the economy and redistributing wealth to banking, as opposed to making its way to the people that actually need it right at the bottom. There's three main problems with our banking system at the moment, is that, and we're seeing this with bail-ins in Cyprus and every other type of thing we've seen since 2007. We have a banking system where when you deposit your money with a bank, they become the owners of your money. When they become the owners of your money, they spend it as they wish and allocate it through loans, which 40% in the case of the UK goes to financial speculation. And then finally, banks actually create money. So to me, more important than central bank created money is private bank created money, which is 97% of it. And that 97% of the money is all allocated through debt based upon the whims of banks. So it's, this problem of over-indebtedness cannot be alleviated until we actually address those issues. And none of those issues have been addressed ever since the crisis started in 2007. And this is making its way right down to the bottom. Because the banks have been ever increasingly looking for new markets for their debt, whether it's governments, whether it's corporations, whether it's small to medium-sized businesses, whether it's consumers, whether it's students through student loans, whatever it is. It's a consequence of continually having to increase our debt level in order to stimulate the economy, in order to create the illusion of growth and kick the can down the road a little bit further. We can't actually rule out, while we're talking about a lot of the top-down solutions, we can't rule out some of the bottom-up solutions, where one of the most significant inventions that's come out of this crisis is decentralized peer-to-peer digital currencies such as Bitcoin, which can produce a very interesting hedge and something that could actually be a country's lifesaver as these things get worse and worse and worse. So there has been some bottom-up innovation in this space, which could actually produce a very real alternative.